Hello, good evening, everyone. Hi, welcome to tonight's webinar. And I believe we have a very full house because more than 1,000 of you registered, and the webinar room is now filled with more than 200 attendees, and we have almost 120 of you watching us on YouTube Live. So welcome, everybody. So we're going to start right now. And please allow me to introduce myself. My name is Richard, and I am one of the committee member of Online Traders Club Singapore, or OTCS for short. So a very warm welcome to you. Okay, so let me just share a little bit more about who OTCS is, in case some of you are new to OTCS. Now, OTCS stands for Online Traders Club Singapore, and we are a non-profit society formed in 2005, and we are a community of traders and investors in Singapore. Again, to me, OTCS stands for a place where we network, share, and learn, and we do it through a series of workshops, courses, and a library. Now, before all this COVID thing, we actually hold in-person workshops where we will have dinner, and then we'll have fellowship, and then we have an invited guest speaker who will share with us. But because of the COVID issue, we have decided to move everything online. So that's what we are doing here tonight. Okay, so for workshops and webinars, we aim to have about 10 to 12 a year, and it is free for our OTCS members to attend. But since now we are doing it online, for some of our webinars, we are also make it available to the public. And this is one of the in-person seminars that we had in January, and we held it in SGX Auditorium, and it was very well attended. For courses, we aim to have about 3 to 6 a year on a whole variety of topics regarding personal finance. And as for library, we have over $6,000 worth of products and resources that our members can borrow. And to find out what they are, please visit onlinetradersclub.org, and then you can find out the list of resources available and also how to borrow them. So OTCS is a place where we network, share, and learn, and we do it through a series of workshops, webinars, courses, and our library. So the question here is, how much is the membership? Okay, normal fee is $120 Singapore dollars a year, but for a time limited period only, we are having a special discount for only $60 a year. And for those who know, if you come for every of our in-person workshop and have our dinner with us, basically you are just, you will get back everything already because the dinner is paid for, right? So to find out more about the benefits of joining OTCS, please visit our website, onlinetradersclub.org. And to be keep posted about what are the upcoming events, webinars and seminars that OTCS hosts, please join our Telegram channel. Search for Online Traders Club in your Telegram, or subscribe to our mailing list at our website. Now, Online Traders Club Singapore is not just run by the committee. We are also supported by a group of good friends who are also our members, and we call them the OTCS crew. And they are the silent heroes that are helping us behind the scenes to handle the events. Okay, and now the disclaimer. Very importantly, we just want you to know that everything that you see or hear, please do your own due diligence. OTCS, nor the speakers, nor me, are responsible for your profits nor losses. Okay? And when you're in doubt, please seek professional help. Okay, so today's topic, very interesting. It's also a very one of my favorite asset classes, and that is REITs. Now, I think many of us would agree that recently the REITs had an unprecedented drop, and some of us call it the Great REITs Sale. Now, I don't know whether this is good news or bad news. I think it all depends on which side you're on. So I was looking at this the yield that we have. Okay, in case some of you do not know, and this is this table comes from yieldssavvy.com, and it is a little hobby project that I started about 4 years ago and inspired by Kenny. Okay, so in this table, I can see that based on today's closing price, we have about 14 REITs that are giving more than 10% yield. One of them as high as 19%. And we have 10 REITs that are more than 8% yield. So that's 24 REITs, more than half are having 8% yield. Now, on a normal period, I think this is a very, very interesting yield. But we all know that we should not invest just based on yield alone. So later on, we're going to tap Kenny's brain and learn from him what are the options that we can have during this great REITs sale, and what are the possible scenarios, and what can we do about it. Okay. So for those of you who want to see the table for yourself, that is updated daily, please go to yieldssavvy.com. And if you have questions later on, please join us inside the webinar room. If you have, we have about 250 people watching on YouTube Live right now. Amazing. Now, okay, so for those of you who are watching on YouTube Live, hang in there and enjoy the session. Later on, at the end of the presentation, hold your questions until the end, and then we will open up a question and answer segment where you can type in your questions if you're inside the webinar room. Okay, so just hang in there. For those of you who are inside the webinar room, if you have questions later on, you can also type in the chat box, and Kenny will answer them at the end of his presentation. All right, so without further ado, I am going to hand over the stage to my good friend, my REITs Sifu, okay, and who inspired me to create yieldssavvy.com, Mr. Kenny Low. Now, incidentally, if you go for any courses, and the educator usually will say something like, they are only teaching for education purpose only, and if you need financial advice, please seek financial advice from a licensed advisor. Now, I want you to know that Kenny is this person, because he is not just an educator in REITs, but he is also, very importantly, a licensed financial advisor, an independent licensed financial advisor. So if you have any needs, you can consult him. Okay, he's well qualified for that. So Kenny, are you there? You need to unmute your mic.
Richard, can you hear me?
Yeah, I hear you loud and clear. So now,
okay,
take it away, Kenny.
Okay, thank you, Richard. Okay, I will share my screen. Can you see my screen? Okay, I hope all of you can see my screen. A very good evening to everyone. Right, today my topic, I will talk about the COVID-19 crash and whether it's a risk of opportunity to hold risk at this moment. Right, just a brief introduction of myself. Just now, Richard has gone through a very brief introduction. But I'm currently a certified financial planner and also REIT specialist from an independent financial advisory firm. I am currently overseeing an 8-figure investment portfolio consists of the REITs, shares, bond, unit trust, ETF, and also the alternative investment. As my part-time, and I'm also the investment coach for Adam Cool Learnings Technology, and I'm also the SGX trainer, training the remisier and also the dealer. I'm also the IBF certified trainer to certify the private banker, the financial consultant, and also financial advisor, teaching them how to construct a proper REIT portfolio for the client. I started my blog since 2009. This is my blog, mystocksinvesting.com. Basically, you can see my past many years of compilation of analysis on my blog. Okay, these are the seminars, training, and workshop, and also interview I conducted over the years. I've spent quite a number of sessions giving the market update at SGX, Share Investor, and also recently I'm on Money FM 89.3 to give about the market outlook on the REITs itself. Last year, I was invited to speak at the REIT Symposium to conduct a REIT 101 to the audience. At the same time, I'm also one of the panelists on the stage to talk about the market outlook. And also consecutively 3 years, I was invited to speak at the Invest Fair for a different topic, but the main topic you still on the REITs. If you want to know that my recent market outlook on the 89.3 Money FM, you can scan this QR code and you can listen to this about 20 minutes kind of interview. For me, I'm sharing and what's going on in the current market now, and at the same time, what will be the outlook moving forward in 2020. Okay, I'll pause here for a while. If you want to QR code it, save it somewhere, and so that you can listen to the interview later. Okay, where to find me? Maybe after this presentation or this market update, you want to find me. There are many ways to find me. One, you can go to my website, mystocksinvesting.com. You can join the mailing list here, or you can go to my Facebook fan page, My Stocks Investing Journey. You like it, or you can find me through my Telegram channel. Okay, just scan the QR code here. The fourth way to reach me is you can email me to this address, kenilo@fapl.sg. Okay, as per usual, the disclaimer, just take note that whatever thing I'm show here for education purpose, all right? Of course, when you see some opportunity here, it's not necessary for recommendation buy and sell, because it's very much depends on the individual risk appetite, investment horizon, and also the investment objective. Today webinar agenda, I'll go through these 3 key topics. How's the REIT perform in March 2020 for the past month? And what will be the market outlook from the technical point of view, and also from macro point of view, and also we'll look at the fundamental of the REIT sector. And lastly, what should the investment do during this period? Okay, let's start with the REIT performance in March 2020. This is how it gets started. Okay, COVID-19 trigger the whole series of events and causes lockdown and also business shutdown of the whole world. And basically, as all of you know, that everything basically stopped. The factory shutting down. We are all, some of people being quarantined at home. We are not able to travel. We are not able to go out so freely. Everything stopped. When everything in the store mode, basically most of the business, you have a cash flow issue because there are no spending. All the cash flow has to stop, and business continue to burn cash, because at the end of the day, the business owners still have to pay salary to the employees, and also have to pay rental, and also some of the business running expenses, right? The whole thing, if we are not able to so resolve it, right, we will be ending up at a economic recession. And when the economic recession start, the company will default, and there will be a lot of default on the debt itself, the bond, and eventually you cause a financial market collapse. That's why this is quite a serious issue for this juncture. And in order to stop this from happening, right, the US Federal Reserve, basically, they have to immediately reduce the interest rate so that to rescue or even kickstart the economy, the store economy, right? You can see from this chart itself, the interest rate hike and also interest rate cut for the past few years, for about past 10 to 15 years. Okay, we have been on the rising interest rate for many years, and suddenly there is a cut on March 3rd on the 50 basis point cut, and also on the March 15th, there's a 100 basis point Federal Reserve cut in terms of interest rate. Why this sudden cut of interest create a panic to the whole stock market? If you look back at the past history, how they increase the interest rate, every time Federal Reserve increase the interest rate or cut the interest rate, they always go with the 25 basis point. Every time they do it gradually, step by step, and so that they don't create a shock to the economy. Okay, but due to the coronavirus, suddenly they have to cut 2 times the interest within the 2 weeks time frame, and the cut is huge. that caused the whole panic to the stock market and caused the panic to all the investors. I will share with you how this interest rate cut, sudden cut, caused the panic to the whole stock market. Right, on this chart, this is the FTSE ST REIT index. Okay, he has been running out, breaking new high for the past 1 year until recently when there is a sudden interest rate cut on Tuesday night on March 3rd. 50 basis point cut from 1.5% and 1%. In general, when there is a cut of interest rate, in general, is good for the property counter and also the REIT sector. Right, after the cut, of course, immediately we can see some rally in the REIT itself. But because of coronavirus, the price being pressed down. Okay, and on the 15th of March, about one or 2 weeks later, and which is on the Sunday night, the Federal Reserve suddenly announced they cut another 100 basis point from 1% to almost 0%. And this is a double knockout. First of all, the gradual 25% basis point interest cut is no longer they increase interest gradually. And suddenly they increase and they cut the interest rate so drastically and create this panic. This is the first reason, the first knockout reason. The second knockout reason is originally the Federal Reserve supposed to announce the interest rate on the March 18. This is the scheduled announcement. Everyone expect they announce the interest rate cut on the March 18. There are only difference for 3 days, right? This emergency cut really let the whole market guess actually what has going on, why they cannot wait until March 18 to announce the interest rate cut, and they have to announce it immediately. Okay, immediately after the announcement, the US future dropped by 1,000 point, Dow Jones dropped by 1,000 point, and you can see that the next day when the Asia market opened, it dropped by close to 10%. Okay, as an investor itself, because the announcement is made during the weekend, no way for the investor to really run, right, to exit the position when this announcement happened. Okay, and this caused a huge sell-off when the Asian market opened. The reason being is because everybody can see that the futures has already dropped more than 10%, right, before the US market even opened. And most of the people, investor has been on a heavy leverage for the past few years during the REIT market bull run. They are using the margin financing and also borrow money to invest in REIT in order to generate the high return. When the market open, drop by 10%, immediately their portfolio, it can be lose by 20% or 30%, depends on the leverage factor they are in, right? And for the investor itself, immediately they have to find cash to top up the account. Otherwise, they'll be entered into the forced selling. And most of the investor, most of the private banker, and also broker, they got no choice. They have to force sell the client investment. When everyone sell at the same time, sell together, there are limited buyer in the market. And when the forced selling start, everything has to sell at the market order, right? But there are no buyer in the market. That's the reason the price keep dropping and the falling is very sharp. And this whole thing, when the sell-off start, if you can see from this chart here, the REIT index itself dropped by close to 40%, close to 40%. Okay, maybe too small to see, within 22 days. Okay, it's a huge drop. Compare with the last market crash during the global financial crisis, the whole sell-off for REIT index, about 40%, it lasts for 62 weeks. And you can see that actually the sell-off is quite drastic. And March 16 marked the historical S-REIT Black Monday for Singapore exchange history. Okay, about 10% a drop in 1 day. And if you look at the selling, basically selling is across the board. It does not matter it's a small cap REIT, mid cap REIT, or even a big cap REIT, everything being sell off. right? And all this sell-off does not really make sense. The sell-off is really beyond the fundamental. If you look at some of the big cap, for example, let me see, where is a capper? Okay, for example, Mapletree Logistics is a blue chip, is a big cap owned by Temasek, right? 16% drop in one day. Cromwell, 13% in one day. Mapletree Commercial owned the Vivo City, and also some of the office building dropped by 12% in one day. Even Keppel DC, right? Keppel DC dropped by 11%. This coronavirus is not a computer virus. It's nothing to do with the computer. Why the Keppel DC also dropped by 11%? That's why you can see that this sell-off really does not make sense. The only explanation is because of the margin call and cause of a huge sell-off. When human come to the picture, human will not do this kind of panic selling during this juncture. Is what has happened. Right now, you look at the market outlook from the technical point of view. I will switch it to the chart. Okay, I draw some chart and draw some line so that you can see some of the technical analysis. Okay, basically this is a FTSE REIT index. There are a few numbers I want everyone to pay attention because under the normal market crash environment, typical the crash when they find the bottom is between 40 to 60%. Okay, you can see from here, from the top to the bottom, sell off. At the present moment, the REIT index has already been dropped from a top to peak about 40%. Okay, this is one of the numbers you have to pay attention to. If you look at the past 10 years data and chart, where are these 40%? This 40% coincide to this support level. Okay, that's the reason, because it closed the support level, the REIT index rebound from this level. And at this level is close to 10-year low, which means that for all the investors who invested in REIT for the past 10 years, based on the price itself, most of the people are losing money. And if you plot the Fibonacci, you're using the Fibonacci, and we are able to find that actually at the present moment, the price is close to 61.8 or 50% level. Okay, and this is based on Fibonacci level. Okay, for those who don't really know the technical analysis, okay, in short, at this juncture, based on technical analysis, this level around 600, it should be the good support for the time being. In other words, if the coronavirus is not going to worsen, most likely we are quite near to the bottom. Next, I come to the different scenario from a technical analysis. How the REIT index going from now? There are typically three scenarios. The first scenario, the REIT index find a bottom at a juncture, and maybe there will be the V-shaped recovery and rally from here. What we want to see is whether this REIT index will form a higher high, and a higher low uptrend pattern. If they're able to find a higher high and higher low chart pattern, that will be the reshaped rebound. Second scenario, the REIT index rebound from this level and come down again to test at the previous low level, forming a double bottom or triple bottom chart pattern. And this consolidation period will last for a while. We call it the U-shaped recovery before we go higher. If the first scenario and second scenario happens, which means that we are most likely seeing the bottom at this juncture. The third scenario, there may be further sell down if this support is being broken, the previous low. And this, bear in mind that this support is also the 10-year low, right? When this happens, the REIT index will be most probably go lower. But it very much depends on whether this coronavirus you create another type of domino effect, maybe the debt collapse or create another crisis. That's why at a present moment, based on the current situation, we still do not know what is going to happen, what will be the domino effect we're going to see in future. At the present moment, the probability is still there. Macroeconomy. I just want for those who are new to the investing or do not really understand why when the stock market rally, we call it the bull market. When the stock market have a big correction or sell down, we call it the bear market. Right? Basically, it's very much depends on how the bull attack and also how the bear attack. For the bull itself, when they attack, they always use a horn to attack. That means they always swipe out during the attack period. For the bear itself, when they attack, they use a palm to attack downwards. That's where the bull and bear coming from. Okay, what is the current situation? How the bull and bear fighting now? Okay, for the round one, bear is helped by the coronavirus. They win the round one. At the present moment, it's a round two. There are battle between the bull and bear. At this present moment, we do not know who will win. If the bull win, and most likely we will see the U-shaped recovery or the V-shaped recovery. And if a bear win, we will go for the scenario 3, right? There will be a further downside. Okay, what are the stimulus or what are the catalysts you will support the bull, right? At the present moment, there are 3 key factors that support the bull. We have an ultra low interest rate environment. We have unlimited QE being pumped by the US Federal Reserve. And also we have all the country, most of the country in the world come up the virus rescue package, right? And for the whole world, we are trying to contain, okay, at the present moment, we do not have any vaccine, right? We cannot eliminate this virus. Everybody, we can only contain. But of course, during containment, social distancing, quarantine, and so on and so forth, there's still a lot of leakage here and there, right? We do not know how fast this one can be contained. The fastest this COVID-19 being contained, the fastest the recovery you're probably going to see. Okay, during this period, there will be a lot of noises, a lot of uncertainty, because there will be a lot of deleveraging happening, and also unwinding of the low volatility structure notes and those things. And of course, there are a lot of margin call. There will be those things you cause a lot of uneasiness and also panic to the investor. Okay, as you can see that all this new every day you look at the newspaper, you read all this online news, you are seeing all the negative news. Okay, at the same time, also everybody trying to boost up the liquidity in the market and also try to help the economy. You can see from here that Federal Reserve slashes the rate into the near zero and roll out massive stimulus in the emergency coronavirus move. That announces unlimited QE and set up several new lending programs. And even Fed coming in to buy the ETF, right, to provide the liquidity in the market. This is unprecedented. Normally, Fed, they don't interfere with the market operation. They don't buy things in the stock market. They don't buy bonds. They don't buy stocks. But now Federal Reserve, they are coming in to announce a fresh round of stimulus to design to calm the market and also buffer the hit to the economy from the coronavirus pandemic. Okay, that's why by providing the much needed liquidity to the bond market itself, hopefully that can save some of the business and also prevent some of the bond from defaulting. Even the Fed is coming out. The analyst was mentioning maybe they're coming out to buy stocks if they are not able to really calm the whole market down. Should the market condition deteriorate, the Federal Reserve could venture into the stock market, several market analysts and also economists say. Okay, basically, Fed is doing all they need to do to really help to rescue this market. Then rescue back. And passes nearly 10 billion aid package for coronavirus business. Okay, basically you can see that actually money
Hello, everyone. I think Kenny is having some tech issues, so let's just give him a few minutes to get his connection back. All right, so just hang in there.
Can you hear me, Richard?
Okay, can hear you now. Wonderful. Okay, so sorry. Yes, this is the slide that you were at, and please continue from here.
Okay, okay. You can see the screen, right, Richard?
Yes, I can see the screen.
Okay, I'll go ahead. Okay, Japan also passes nearly 10 billion aid package for the coronavirus hit business. Okay, basically, the whole world itself, they're pumping in the money to rescue and also to kickstart the economy. Okay, I'll show the previous chart again. Okay, basically, the rescue is trying to rescue all the business, at the same time also prevent of company and also debt defaulting, and also prevent the financial market from collapsing. Okay, basically this is what's happening in the whole world now. So it's up to us to decide who will be the ultimate winner if given all the government, giving the whole world enough time. Okay, for me, I will look at the historical data for all the past market crash. Eventually, all these things will be resolved. It's only during this short-term period, a lot of investors you feel very uncomfortable, okay, because but you need times to really get all these things resolved. Okay, fundamental. I will come to the fundamental of the REIT sector itself. This data extract from SGX research. If you look at the whole S-REIT market capitalization growth, the S-REIT sector in Singapore, he has been growing at the compound average of growth rate of 15% for the past 10 years. Moving forward, definitely SGX and also MAS will continue to grow the REIT market. Okay, this is one of the key things to get the Singapore exchange ongoing, and one of the key asset class to let the SGX to go strong over the long terms. And if you look at the S-REIT long-term total return, okay, for the past 8 or 9 years before the market crash, you can see that if you invest in February 2012, and basically the total return, including all the dividend, it come up to 240, right? I mean 2.4 times, but based on the investment amount, right? The long-term growth in the S-REIT itself, basically you'll be powered by the portfolio size. As REIT, you're definitely getting bigger and bigger in terms of market capitalization. They are doing more acquisition. They are including more and more portfolio property to generate more rental income. Okay, and also being as REIT, the underlying asset class are basically property. Okay, property always pegged to inflation and also population growth. As long as there is an inflation, as long as there is a population growth, property sector itself, eventually you grow higher and higher. Okay, that is a fundamental. Okay, what is the current valuation and the yield for the FTSE REIT index? This data was collected before the whole market crash. You can see from here in February 2020, the REIT index, the price to book value is about 1.1. And the yield itself is around 4.5. Okay, it's pretty low. After this huge market correction, the current price to book is about 0.7. It dropped by close to 40% in terms of price to book value. And also the yield has shoot up to 10%. Okay. Of course, some of the investor you debate. This will no longer valid because the price to book value will drop after this coronavirus, and the yield also will drop after this coronavirus. But let's look at another perspective. If the whole coronavirus outbreak to be over in the next 1 year, okay, look beyond that. 2 years down the road, 3 years down the road, 4 years down the road, even 5 years down the road, will the REIT index go back to the previous level? Will all the rental coming back? Will the valuation continue to go up? Okay, if we are able to capture this opportunity, basically we are buying something at very cheap. But of course, these data are the lagging data. Immediately in the near term, there will be re-rating. There will be cut in dividend. There will be cut in the valuation. Okay, this is a yield comparison table for the income asset class in Singapore. In general, for the whole REIT sector itself, at the present moment, giving us close to 10% yield. Again, just take note, these are the lagging data, right? Compared to the bank interest rate, 0.05, 12-month fixed D, 0.35, 5-year bond, 10 years bond, even a Singapore saving bond at the present moment is only giving us 1.63%. Okay, CPF OA as per usual 2.5%, and the Spider STI ETF giving us 4.8%. That's why if you are looking for you asset class at a juncture, if you just invest in the REIT itself, okay, let's say that the REIT you want to discount a dividend maybe by 50%. Let's say the 5%. Actually, 5% is still better than most of the asset class over here. Okay, just now Richard has already shown what are the dividend yield for most of the REIT. You can see that actually quite a lot of REITs, the dividend more than 10%. Okay. Okay, in layman terms, if you do not really understand what does the price to NAV or price to book means, okay, I'll give you another perspective to explain what does it mean, right? Imagine you have an investment horizon of 10 years preparing for your retirement. Okay, you have, if the property value is worth $1 million, right? At the present moment, if you're looking for physical property, the physical property like the premium hotel in US is only cost you 300,000. Take note, valuation only on valuation 1 million, but at the present moment, the value is a fire sale. They're only selling at 300,000. The premium hotel in Singapore, fire sale only selling you 550,000 because of all the fear and no buyer. And also, investor worry about there are no visitor coming into Singapore to stay in the hotel. That's why all the dividend will be cut. Okay, that's why the valuation drop. Okay, premium resort at multiple location worth 700,000. Premium shopping mall in Singapore and Malaysia only cost you 630,000. Hospital in Indonesia 800,000. Branded service resident and hotel 750,000, office building, premium office in CBD, branded malls in China. Okay, basically everything is selling at cheap at the present moment. Okay, this is what I mean. Okay, now let's look at some of the case study. Okay, I believe that most of you have already read some of the news on the internet or the newspaper itself. Now the Chinese citizens are returning to the shop as COVID-19 outbreak eases. Okay, it's not all the doom and gloom at the present moment. For example, today we just have a sell-off of the retail mall in Singapore after SPH REIT posted a closures, maybe 70 or 80% plunge in dividend. They are going to cut a dividend immediately. Today, Capital Mall sell-off close to, okay, I'll show you some data. Okay, Fraser Center Point, which has a mall in Woodland, Causeway Point, and also North Point. Okay, they dropped by 13% in one day, right? And Maple Tree Commercial, they have the Vivo City drop by 7.43%. Capital Mall drop by 6.36%. Okay, SPH drop by 6%. Okay, basically all is expected the dividend will be cut because the tenant you have difficulty paying for all the renter. In the short term, you'll be affected, but not necessarily this will impact China. Basically, in China itself, the most people is going back to the mall, right? Now, let's look at the opportunity in the China mall. Okay, I have a table here to show you that. Okay, this is a table I compiled myself, and also my son helped me to fill in all the data over here so that when I want to do the analysis, when I want to do research, or when I want to identify the opportunity on the market itself, I have everything on standby. I know that what are the opportunity we can go in to buy immediately, right? For example, I use that example. What are the retail mall opportunity in China? Okay, this table will show where are the location for all the property. Okay, in this case, I'm looking for those retail mall in China, right? I just highlight this two column. China, what are the property in China? We can see that Escort has about 7 property. BHG Retail REIT have about 6 retail mall in China. Capital Retail China Trust has about 14 mall in China. EC World has about 8 industrial building in China. Okay, basically I see that a maybe opportunity for us to invest is a Capital Retail China Trust. Then what will be the yield for Capital Retail China Trust at the present moment? Okay, from this table itself, basically there are 8 quarters of the DPO history, and at the present moment, China Retail Capital Retail China 8.38%. They also have an occupancy rate of 96.7%. Weighted average lease or expiry of 2.4 years, gearing of 37.2, and the interest cost about 2.98, and interest cover ratio is about 5. Okay, interest cover means that how much rental income generated to pay off all the liability or the debt obligation, right? The higher the number, the better, which means that all the rental being generated is able to pay off all the interest. Okay, weighted average debt maturity 2.84, and at the present moment, based on the valuation, is close to 23% discount. And I compare to the historical high and low, the current valuation is closer to the lower range. Okay, and the yield spread 7.07 is basically the comparison based on the current yield of this REIT 8.38 minus off of the 10 years government bond. That's why the yield spread of 7.07 is pretty attractive. Okay, this is the retail mall opportunity in China. Okay, another example. At the present moment, everybody also worry about the hospitality because during this coronavirus outbreak, the retail mall and also hospitality sector will be badly affected because basically nobody go to shopping mall, nobody go for traveling. That's the reason these two sectors have a huge sell off. But also not everything is doom and gloom, right? If you look at the news recently, okay, basically the Singapore government identified a few hotel in Singapore uh, uh, to do designated dedicated facility to do the quarantine. Okay, some of the hotel listed here belongs to some of the REIT. Okay, for example, the Village Hotel Albert Court, Elizabeth Hotel, and actually they belongs to the Far East Hospitality. Okay, how do you know all this information? What you can do is you just need to go through the Far East Hospitality Trust website, look at the portfolio, and you can see that they have a Village Hotel Albert Court over here, the Elizabeth Hotel over here, right? And also some of the Village Hotel somewhere in Singapore. Okay, basically during this period, not necessarily all the hospitality trusts they are not generating the revenue or collecting a rental due to the quarantine requirement. Maybe some of the hotel to be used, and also they are getting paid to provide this kind of quarantine services. Okay, if that's the case, basically the valuation itself is really overdone. The selling is really overdone. So if you look at the Far East Hospitality Trust at the present moment, what will be the valuation? At the present moment, the Far East Hospitality Trust giving us 9.77%, and the price to NAV, the price to book is 0.45, which means that 55% discount to the NAV. And if you compare to the historical high and low, the current valuation is at the historical high, and they have a yield spread of 8.47%. It's pretty attractive. Okay, another case study. Okay, this is from a Jakarta post. Basically, Jakarta itself, they are running out of a hospital. They need to convert some of the athletic facility to become a temporary hospital. Okay, which means that really the hospital is overbooked. Okay, and during this COVID-19 outbreak, the the healthcare sector should be performing better. Okay, let's look at the healthcare sector. Okay, basically there are two healthcare sector in Singapore. One is First REIT, the other one is a Parkway Life REIT. If you compare to the past 8-quarter performance of the First REIT, they have been consistently paying a dividend of 2.15 cents for the past 8 quarters. Okay, and the yield at the moment is 12.65%. Right? Then we have to ask ourselves, do you think that the dividend yield to be cut during this COVID-19? Basically, hospital are the busiest place to visit at the moment, and they are giving us 12.65. Unlikely the dividend will be cut moving forward. Okay, at the same time, the valuation is only 0.68, which means that close to 32% discount. And the price to low, the lowest valuation for the past 10 years is about 0.57. Yield spread is about 11%. Okay, basically I'm using all this table to really help me to speed up all my decision making and also doing my research. Okay, in summary, I've gone through the technical analysis, macro fundamental analysis, and also I I have shared with you some of the opportunity at the present moment. And there are a few things that we need to take note from a macro side. At the present moment, we have entered into the ultra low interest rate environment. We have a QE unlimited and also MAS. There will be a potential increase of gearing limit proposed by MAS. Okay, all these things you basically provide a very low cost of capital to the REIT manager itself to encourage them to grow to the M&A. From a fundamental perspective, almost everything is cheap, but just please take note, the NAV, the net asset value, may drop in during the short term because it's the valuation of a property itself is very much depends on the cash flow, the income generated from a rental income. Okay, the dividend will definitely be cut in the next 2 or 3 quarters. For those investors who want to invest at this moment, if you want to pick up some cheap stuff, you have to take note that dividend will be cut in the next 2 to 3 quarters. And do expect there will be a lot of downgrade in the credit rating, right? And from technical perspective, FTSE REIT index, there may be a 3 scenario, but based on all the numbers itself, 40% sell off from a peak and close to 50% Fibonacci retracement level, the REIT index itself may be close to bottom. Yeah, this is a snapshot on the S-REIT 2020 outlook. So next, after going through all this market outlook, what should the investor do? That is the most important question. Okay, I just want to get everybody refocus back on why are you investing in the first place? Why are you investing in REITs? Okay, what is REIT is all about? When we invest in REIT, our objective is to generate passive income through property investment. REIT is an alternative to property investment. This is not investing in a business. Business can go bust if their business running out of cash or the competitive environmental change that can go bust. Property being property is a brick and mortar. At the end of the day, we can feel and touch. No matter who are the landlord can change hand, tenant can change hand. At the end of the day, the property is there to stay, right? When we invest in property, we are expecting this property in the good location, in the good condition, and continuously and consistently generate income. Okay, that's why I call it everlasting income generating machine. That is the focus. I also will go through this REIT business model, how so that everybody understand, right, how it works. REIT basically borrow money from a bank, raise the fund from a shareholder to go and buy a property. After buying property, they collect the rental and from the tenant, pay off all the interest. The remaining 90% of the income will be distributed to the shareholder as a dividend. Oh, what will be the risk? At this juncture, the rental income will be affected because we are talking about everything being stored, being frozen, right? In this kind of situation, cash flow has become an issue from all the operation. This is not only happen in REIT, it happened to all the business, right? This is not the REIT issue. This is a whole world business issue. That's why you can see that SIA also got problem. Boeing also got problem. There are a lot of business, especially SME, they are running out of cash, then they have a cash flow problem, and they are at the verge of bankruptcy. Okay, for REIT itself, REIT also cannot escape. That's why what the REIT is going to face is they'll be facing the delayed rental income from tenant due to lockdown, And also some of the security deposit will be drawn down or already forfeited. Okay, these are the current risks. Okay, from the rental income side, this is the income perspective. But how about from the creditor perspective? Some of the REIT that enter into the secure borrowing, right? Due to they are unable to pay the coupon because this liquidity, so-called they're running out of liquidity, they are not getting the rental income from the master lease or their tenant. That's why they are not able to pay down the coupon or bank interest. The creditor can go after REITs to really chase for payment. Okay, that happened to one of the REIT, Eagle Hospitality Trust, that received of the notice of default from a creditor, and that's why the currently this Eagle Hospitality Trust was being suspended. Okay, but this other thing is only short term. It very much depends on how they negotiate, because the government, they understand the difficulty for all the business. They are coming up all the help to need the stimulus package, or even Singapore itself, they are coming up, they're trying to come up with a law to limit that, also to prevent the landlord to take over the property because of the tenant is not able to pay for the rental income. That's why you can see a lot rental waiver, rental rebate, rental relief being offered as a stimulus package. At the same time, the virus rescue package, you provide a liquidity to all the business owner, so that to help to solve all this kind of cash flow issue. Okay, these are the current major risks in the REIT itself. So, what should investors do during this difficult time? Okay, if you are focusing too much on the negative news in the current market moment, you become very depressed. Okay, my suggestion is, do not focus on all those things. Those things you can't control. You're basically wasting your time, wasting your energy. Focus on all those negative news. Focus on what you can control and what you can do. Okay, there are 6 points for you to take note. Right, I'll go through one by one. Okay, first of all, focus on your objective. And why do you want to invest at the first time? What is your investment horizon? Are you investing for your retirement, which is 10 years, 20 years, 30 years down the road? Or are you just going to invest for 1 year? Maybe next year you want to just take some capital gain and sell off all the REIT. Okay, your investment horizon is very, very important to help you to make decision at this current environment. What is your risk profile? Are you conservative in nature? You cannot take any volatility of any price changes. If the REIT drop by 5%, drop by 10%, you can't sleep, you panic, and you can't go to work. Then basically, I think that REIT is not really suitable to you, right? But if you don't mind to have that kind of volatility, one day go up by 10%, the other day drop by 10%, but at the same time, you also have you being rewarded with the huge capital gain or maybe future growth in dividend, maybe REIT is suitable. So your risk profile is very, very important. Also, the fourth point is you have to make sure you understand what are you investing in. Okay, for REIT, you are investing in physical property. Physical property will be there no matter what happens, right? The landlord, the owner, the REIT manager may change, but the physical property is still there, right? It's only changing the ownership. Okay, as long the physical property is there, is tangible, you know that will be unlikely your investment will be wiped out during whatever scenario. And more importantly, you cannot, we as an investor, we are not able to control all the information which is not available to us. What we need to make sure is do not put all the eggs into one basket. We have to make sure we diversify our portfolio. There are a lot of information is unknown to us as a retail investor, and even the portfolio manager, the fund manager, they do not know everything. That's why the portfolio manager, they always use diversification in their strategy. Number 6, have a very clear strategy and clear execution plan what you want to do when things happen. Do not wait until the last minute when things happen, you start to panic what you want to do. For example, at this juncture, Just now, I have already shown you there are three scenarios going to happen. V-shape rebound and rally from here. U-shape, and moving sideways for a while. And also, there will be the further sell down. What are you going to do in each of these three scenarios? Okay. Okay, next. This one is the typical retirement income solution, right? For example, you already know that you are investing in REIT is for long term. You are planning for your retirement. You have a 10 years investment horizon. And when you retire at maybe 60 years old, you are planning to have a dividend from the REIT itself as a replacement income. And when you hit 65 years old, you are planning to get some of the income from a CPF life, some of the income from a REIT itself. Or when you reach 75 years old, you hope your annuity from an insurance can start to pay up, right? So it's very important that at your retirement, you have to construct a portfolio of diversified asset class to help you to fund for your retirement. Okay, that is a more important thing. Okay, there are 5 factors to consider in the retirement planning. And this factor you very much determine whether you should put 100% of a portfolio into REITs, or you allocate maybe 30% into REIT, 40% into a CPF life, or 40% into the annuity. It very much depends on your risk profile. Okay, I'll go through this one by one because it's very, very important. Okay, at the retirement age, you have to decide what are the income you want to be guaranteed, what are the income you do not want to be guaranteed. For example, the guaranteed incomes means that you can predict every month they'll give you 1,000, 1,000, 1,000 for the rest of the life. Okay, CPF life, you provide this guaranteed income. Depends on whether you are aiming for BRS, FRS, or ERS. Okay, you can Google it, all this CPF life issue. I'm not talking about CPF here. I focus on REIT. That's why you can Google it to understand what is CPF life is all about. The non-guaranteed income, basically, you can use REIT as an asset class to give you some non-guaranteed income. Okay, the dividend can be 1,000 today, or maybe 1,500 1 or 2 years later. That's why there will be a variation. Okay, this is what I mean by the non-guaranteed income. Okay, second point, active management versus passive management. If during your retirement age, you just want to invest something, you do not need to monitor the market every day. You want to sleep well, you want to go for a holiday, go for your gardening, right? Then you should go for the passive management. Then REIT is not suitable to you, because investing in REIT, you still have to monitor at least every quarter. You still have to deal with all the corporate action. You still have to look at the market condition, right? And you still have to time the market sometime. Okay, you still need to manage the REIT quite actively. Okay, the third portion, if you park your money under the CPF life, there will not be any growth in the income payment next time. For example, if you're getting 1,000 per month at 65 years old, at 90 years old, you're still getting 1,000 per month. It depends on what kind of scheme. I'm referring to the CPF standard scheme, no growth. Okay, but you will invest in REIT, there is a growth element, because the REIT that is inflation hedge, that can increase in dividend year over year, and they also can acquire more property, and so that to increase the dividend payout. That's why there is a growth element in the REIT investing. Number 4, high risk versus no risk or low risk. If you want to look for no risk investment, CPF life will be the best investment. Low risk, probably maybe the annuity, because the risk is at the insurance company. Okay, REIT consider is a high risk investment during the retirement age. Number 5, liquid or not liquid. And you know that if you park money in the annuity or CPF life, if you need certain withdrawal on cash, you are not able to do that. But for REIT itself, you can sell the REIT and you get the money back immediately. Okay, so these are the important factors to consider in the retirement planning. Okay, the key question is, most of us as an investor, we should worry, not the market crash. We should worry about this triangle of the retirement planning much more than the market crash. First question, do you have enough money to retire? First question, right? If you do not have any enough money to retire and you do not have any investment portfolio to retire, you put everything under your piggy bank, your bank, and eventually you'll be drawing down. Okay, the risk is if you outlive your saving, what is going to happen? That is a key risk. Or you can build a portfolio, a diversified portfolio, can be CPF Life, can be annuity, can be shares, can be bonds, can be REIT, to give you the dividend payout consistently. At the end of the life, you are still able to pass on your investment to your next generation, to your beneficiary. So, in summary, we have much bigger long-term problem for us to concentrate than the current market crash. Now, I come to this 2 cup. Okay, you have to decide which cup you want to be. On the left-hand side, if you are the optimistic person, you always look at this cup as a half full, which means that there are still some, maybe 50% percentage of, you can fill out the whole cup, right, to increase your portfolio, to grow your portfolio. If you're on the right hand side, you always look at this cup pessimistically, okay, every time half empty. Okay, how I'm going to protect on all these things, right? You are not going to see any opportunity. Only the optimistic investor look beyond the COVID-19 can identify opportunity. If the investor on the right hand side, you most likely you are not able to identify any opportunity moving forward because you are still, everything is too scared. You dare not do anything, right? It depends on which side are you in, which cup. Okay, I just share with you my story, right? My experience. 10 years ago, during the last global financial crisis in 2009, I was in this cup. I was so scared, I dare not invest and dare not make decision and miss out the whole bull run. Okay, but at the present moment, I have already moved from this half empty cup to the half full cup. I am seeing plenty of opportunity. Okay, this chart is very, very important. I hope you pay special attention to this chart, right? Because there are a lot of meaning on this chart. Okay, when we invest, we always want to start from point A and eventually reach point B, which is our retirement, right? When you are invest in a REIT, when the times is good, you of course you are having regular dividend and growing dividend. Okay, but if you're holding the REIT long enough, eventually because of the growth and also nature of REIT, increase in portfolio size, increase in market capitalization, inflation, population growth, eventually all your REIT investing, you'll be growth in terms of valuation and you'll grow in terms of the dividend. That is the nature of REIT investing. Okay, provided you are investing in the right REIT. But during this short-term COVID-19 outbreak, it is expected the dividend will be cut, the share price will be down, the NAV will be down. Okay, it very much depends on each individual investor perspective. Which area are you looking at? Are you looking at the long-term plan to reach B, or are you just looking at this this worst case scenario, this noises, COVID-19. Okay, what I would advise the all of you that the investor, if you're lost, please go and look for your trusted friend, your trusted advisor, your trusted banker, whoever, to help you to clear your doubt, okay, and to plan out what do you want to achieve in future, right? If your holding horizon is at the point B, any opportunity in this market crash is the opportunity to buy things at cheap. Okay, for my past 10 years, I don't even have any chance to buy Capital Land, Fraser's Central Point, Maple Tree Industrial, Maple Commercial. I have limited so-called chances to accumulate them in a huge quantity. Only until now, I'm able to buy things at cheap. Okay? And also bear in mind that there's a backdrop. And all this REIT investing over the long term, you'll be supported by the macroeconomy. Ultra low interest rate environment, unlimited QE, and bear in mind that when everything is very cheap, what will the REIT manager do? For those REIT manager who are able to borrow cheap money and also they are able to identify good valuation, good property, they will go for aggressive acquisition. Okay, it's a double cheap scenario. You cheap money and also cheap valuation. This is the best time for the REIT manager to grow. Okay, when everyone is in panic mode. Okay, of course, after the COVID-19, all the business issue, cash flow issue being resolved, there will be another big thing is coming, which is the hyperinflation, because there are just too much liquidity in the market. And hyperinflation, how are we going to deal with it? The best thing to deal with it is to have a portfolio of property, because there is an inflation hedge. Okay, the next one is investing psychology, right? Let's look at this chart. Okay, start to identify where are we now. We definitely is not on the left hand side. It's not under the excitement, thrill, euphoria, anxiety. We are definitely close to the bottom right here, because I received many email, many call, many WhatsApp messages. Okay, and I am really very close to the ground. I know what the investors are doing. I know what investors are thinking, are feeling, because I have seen people panic. I have seen people sell everything and get it out. Okay. I also seen people, someone told me he cannot sleep because it lose a lot of money, right? Basically, we are close to this bottom. Is most of the people is close to this bottom, right? I believe that we are quite close to the rebound. Okay, so far we are here. Okay, so okay, this is a pool in my Telegram, right? After the big sell off close to 40%, okay, this REIT index actually rebounded by 22%. Okay, I just want to have a feel on what are the majority of the investor out there are thinking, are doing, right? Basically, I just create some of the questionnaire over here, right? The first question is whether anyone is making a nice profit in the 1 week. Okay, this 1 week is 22% rebound, right? Basically 26%. Congratulations to this group of people. Okay, I am very, very sure this is not by luck. Definitely, this group of investors, they have done their homework, they have a cash ready, they have planned for it, they know the technical analysis, they are identify opportunity. If you know technical analysis and you have guts, you definitely can catch this rebound, because based on the candlestick itself, we are close to the support here, 10-year support here, and at the same time, they're forming a hammer, right? This is a reversal pattern. Once the market open higher, give you a bullish candle, basically it's a rebound confirmation, right? Congratulations to this group of people. Okay, their second group of people, about 28%, got no guts, totally no guts or hesitate, right? That's why they missed out the opportunity. Okay, the third group, basically, 21% of them, no bullets. I would advise this group of investor, you need the proper financial planning. right? Because we have to get, if you really want to invest in the investing world, you have to get prepared all the time, right? When market present you opportunity, you have to take action. For the other group, the investor who have cash but do not know how to buy, when to buy, and don't even know have an account, my advice to you is quickly go and learn about crash course, attend courses and practice, and hopefully you can capture the opportunity within 1 year after you learn all these things. Otherwise, you have to wait for another 10 more years, wait for the next market crash, or you get someone to help you to build a portfolio. Okay, the last group, what has happened? I think this group probably joined the wrong Telegram channel. Okay, during the rebound, the 22% in 1 week, and most of the investor, close to 75%, do not know what to do, right? Let's look at what has happening in the market. This is the SGX fund flow weekly tracker, right? On the week itself, you can see that every week they track what the big institutional investor doing, buying and selling, right? You can see very clearly that during this period, the financial services, basically all the big guys, big institution, they are selling all the banks. Okay, that's why you can see that they're selling in the bank. And what were they doing during this period? They are increasing their position in the REITs. Okay, that's why I am using this one to have a sense what are those smart money are doing when all the retail investors, they are panicking, right? This information are very valuable. Okay, when all the big guys start to accumulate, okay, which means that they are also seeing value in all this investment. This is the best time to buy things at cheap. Okay, and what are the counter they are buying? Okay, they are basically buying in the industrial related REITs. Okay, basically Ascenders, Mapletree, and Capital DC, those are industrial related, because during the market crash, during this COVID-19 outbreak, this sector are the least affected. Okay, but they are selling capital mall, retail, and also hospitality. Okay, you can see clearly here. This is another very interesting insight to see what the big guy are doing. Okay, on this chart itself is Ascenders for the past 5 days trading and the past 10 days trading, and you can see that recently the big fund manager, they are buying. The buy is higher than BU stand for buying up, SD stand for sell down. The much more buying up than the selling down. And the amount here, 15K, 50K, all these things are retail investor, because a big fund manager, they are not going to buy this small amount. They're going to buy in this large amount. You can see very clearly here. They are coming in, they scope up the Ascenders REIT. Okay, surprisingly, the big guy, they are not buying Parkway. Okay, they are not buying Parkway. Okay, maybe one of the reasons Parkway is overvalued. Okay, and the big guy are selling Capital Mall. Okay, for the past 5 days, for the past 10 days. The next question, common question I received from the investor. Should I sell now and buy back at bottom? Okay, so that I can make a lot of money, right? Okay, this is my reply in my Facebook student group. Okay, I point out a few pointers. Why sell now and buy back at bottom later strategy will not work? First thing, you do not know when is a bottom. Just now I have shared you the trade scenario. I can plot a chart. I also do not know what is a bottom. I only know the bottom when the chart moves to the right. Everything over there, I know that's a bottom. Okay, at the present moment, no way I can know where's a bottom. And you also do not know where is a bottom in terms of price. Okay, when and what. And you don't buy when the bottom is here, because due to whatever reason, maybe you're busy working, you are not in front of computer, or you never set up an account, you don't buy when the bottom is here, because people may not be able to take action. Okay, number 4, when the bottom is here, you don't have guts to buy. Okay, because emotion. Because you read the newspaper every day is all negative news. You dare not buy. If you buy, maybe your wife or your friend tell you, why are you buying now? Why are you making this decision? Because the market is crashing. Okay. Number 5, you don't have money to buy when the bottom is here. Okay, this is a planning issue. You don't plan for it, you cannot capture the opportunity. Okay, and also if you do not know how to read a stock chart and also do the technical analysis, nowhere you can know when is a bottom, because you can't feel the bottom. You have to read from somewhere. Okay, and you also don't have time. If you don't have time to monitor closely the stock price every second, every day, okay, don't have commitment, you can't capture the bottom. Okay, if you are able to capture all the bottom, but you're not fast enough to trigger the buy by clicking when there's a sharp rebound, by clicking the buy button, okay, because you are busy working on something, you also cannot get it. Okay, so in short, you will only know the bottom only a few months later when the price never go back to the previous low. Okay, 事后诸葛亮啦. Okay, we can only know there's a bottom, right? Now, this is based on my understanding and also analysis throughout so many years. I cannot catch anything at bottom. That's why for me, I don't bother to catch a bottom because I know that I cannot do it. Okay, and I created another poll in the Telegram to see whether anyone can guess the bottom, right? Do you know when is the bottom for S-REIT? Okay, I just create a few things. By April, by May, by June, and 61%, I have no idea. Okay, which means that based on this statistics, close to 90% of people will not be able to get a bottom, right? If you get a bottom, basically it's a guessing. It's a luck factor there. Okay, so based on this thing, in summary, my advice to the investor, don't bother to catch the bottom. We can't catch it. Okay, REIT sector is very cyclical in nature. Every crash, after every crash, the REIT sector you rebound strongly. Okay, this is based on historical data. Okay, this time the REIT crash is not end of the world. You do not need to panic. It happened in 2007, 2008 when the REIT crashes by 15%, 37%. After the next few years, 2009 they go up by 28%, 2010 28%, 8%, 19%. You can see that there'll be bull run for many years. Okay, and especially during the ultra low interest environment. Okay, all this risk investment is moving in cyclical nature. Okay, if you do not use the opportunity to buy at low, right, very likely you're going to miss out the huge run moving forward. So I coming quite close to my last few slides. Okay, recommendation for investor. I summarize it again. Focus on your financial objective, which is controllable by you. You take action, you plan for it, is controllable. You cannot control the share price. You cannot control all the news. All right. Don't waste too much time on looking at the share price every day. When investing in REIT, always have a long-term view. If you are having a short-term view and hope you can trade from a REIT price movement, forget it. You are doing the wrong thing. Okay, that is trading. That's not investing. Investing, we always look at long-term. And when you invest, always see beyond the COVID-19. Don't look at the present moment. More shutdown. I cannot go for holiday. I cannot go business trip. I cannot travel. Don't look at this present moment. You look long term. 1 year later, 2 years later, 3 years later, the world will be. It means COVID-19 will no longer in this world. Everything will be under control, or vaccine is already available. When all this thing over, everything will be back to usual, back to normal. Okay. Number 4 strategy is we cannot time the bottom. So use the time diversification strategy to accumulate the good REIT in phases. Number 5, diversify your portfolio. This is very important. Number 6, time in the market is more important than time the market. Okay, let's have the example. At the present moment, the Singapore REIT giving us about 10% yield at the present moment. Let's say that moving forward, we're going to have a lot of dividend pay cut, let's say 5%. Okay, if you invest at the current price, you're getting 5% now. If you hold it for 5 years, you are going to get 25% from a dividend. 5 years later, the REIT you recover, definitely will recover. You have a capital gain. You just look at it. Basically, it is quite a no-brainer if you have a buy and hold strategy and buy something at cheap. Okay, so stay invested in the current market condition and continue to collect dividend for the REIT investing. Okay, number 7, cheap and good opportunity only available in the market crash. When the whole market recover, unlikely you're still going to get very cheap and good REIT. For example, Capital Mall, Fraser Center Point, Mapletree Commercial, everything will become very, very expensive, right? Then this is really violating our investing rule 101. Buy low, sell high, buy cheap and hold. Okay. Number 8, have a mindset of cup half full so that you can see the opportunity, not a cup half empty. If you have a cup half empty mindset, I am almost can guarantee you definitely will not going to buy something cheap. You are definitely, you slow down your wealth accumulation progress. So this is the last chart, probably last chart I want you to just memorize it. When you're investing, always look for long term. Okay, see beyond this COVID-19. Okay, look at the future growth and buy something and cheap. Okay, and wait and hold for the REIT to recover. Okay, I know some of you want to have this REIT table, right? I've have spent close to minimum 100 hours. Actually, my son is helping me to table this table. He go through every single website, all the research page to consolidate and also compile all this information into this so-called REIT table, right? If you want to have a copy, in order to compensate his work, by the way, the money will not come to me. Okay, basically I let him handle this one, everything to be go to his pocket money, and also he can use the money to invest into REIT, right? Okay, this is how it looks like. In this table itself, you have the whole REIT table, okay, with all the important financial ratio, everything into one page, okay, so that you can analyze it and make the investment decision quick and fast. On the second table, basically is where are all the property location, okay, whether in Singapore, in China, how many property are there. This is important for diversification purpose. And the third table is based on historical data. I have get him to plot the price to NAV range chart so that you know that based on historically, whether the current valuation is close to the historical low or still close to historical high. You can see from this chart itself, some of the REIT, they are still holding pretty well. They are still, the valuation is still to close to the high. But you can see the majority of a REIT, they are actually, the valuation is close to historical low. It's pretty low. Okay. If you want to have a copy, this is a pay now QR code, right? If you want a PDF copy, is a $14.99. If you want an Excel spreadsheet with $200, anyway, I don't want to share this one at all because this is my trade secret. Okay, but maybe some of you really want to speed the whole thing. You can straight away QR code it. Okay, what you can do it basically pay now either $14.99 or $200. Importantly, please indicate your email address. Okay, so that we can send this report to you through your email. Okay, that's the important thing. Okay, I'll pause here for a while. If you want to take a picture, okay, please go ahead. Okay, that's all for my REIT market update. If you have any further inquiry, you can email me at kennylaw@fapl.sg. Okay, thank you. I hand back to Richard.
Wow, thank you very much, Kenny. Indeed, it's a very, very fruitful session, and you have packed so much information, and specifically about REITs into this presentation. So thank you very much, and also kudos to your son for putting in so much effort to put together that Excel file. So for those of you who have asked the question about how can I get that file, uh, I think the answer is there already. Now we've come to the part where we will go into the question and answer segment. So for those of you who are in the webinar room, you will see a chat box on the right hand side, or you scroll down depending on what devices you're using, and you can start typing in whatever questions that you have. All right, so you can go ahead and do that. And for those of you who are watching on YouTube Live, in the room we have about 200, and in YouTube Live we have about 350 people watching right now. So for those of you who are watching it on YouTube Live, and if you have a question, please join us in the webinar room, right? So in the link that you received, you can click on it and then join us in the webinar room, and then you can type in your questions. We have space for about maybe another 10 more people to come into the webinar room. So if you're watching us on YouTube Live and you have question, please come into the webinar room and type in your question in the chat box so that Kenny can answer it very, very soon. Okay, so Kenny, thanks for your sharing, and shall we take a look at the Q&A? Yeah, so one thing before that is that I think many of us have attended courses before, and the course trainer will always say, you know, before you make any decision, please consult a qualified or licensed financial advisor. So I think Kenny, over the years, since I knew him in 2014 till now, he has went on from being a REIT blogger to a REIT trainer, and then he also went on further to become a licensed financial advisor. So if you have any pressing questions about your portfolio and you don't know what to do, I think he is the one that every trainer has been talking about that you should consult. Okay, yeah. So if you want to receive his insights about REIT, I think now could be the time while the questions are coming in. For those of you who haven't joined the Telegram group that Kenny has put together to join his Telegram group, is just simply go to Telegram and search for retirement. Okay, so what does retirement looks like? I have a sample here. So right now, just now before when we started, there's about 752 members in his Telegram group, a Telegram channel. This is not a chat group. Chat group very noisy. So this is a Telegram channel where Kenny, when he see anything interesting about REIT, he will post into this channel. So there was 752 of you before this webinar. And let me just refresh the page and see how many of you are there now. Wow, we have increased to 823 in his Telegram channel now. So if you haven't joined, please join his Telegram channel. Okay, so now we come to the section on the Q&A. So I see, wow, there's about 30 questions waiting already. So for those of you who are in the Facebook, in the YouTube live, you have questions, please come into the webinar room to ask, okay? So Kenny, can you click the moderation button? Okay,
Yep.
and then you
Can you hear me?
yes, I can hear you. Everyone can hear you. Yeah,
Okay, okay.
so you can pick any questions that you'd like to ask, and then later on, if you have any questions that are not asked, I can fill in the blank. All right, so go ahead and take a look at which question you would like to ask, like to answer first.
Okay. Okay. First question I can see from RH. He asked about, can REIT manager delist the REIT by force at a bargain price disadvantage to retail investor at this moment? Okay. Basically, the REIT manager, if they want to delist any REIT, they have to get the shareholder approval. Okay, which means that, for example, if the REIT at the present moment at $1, right? If they want to delist the REIT, they have to go through the EOGM to get a shareholder approval. And I don't think that the investor itself, they want to approve the REIT manager to sell at the current market price. That definitely to want to have some premium. For example, maybe 120 or 130, 20% to the current market price, or 30% premium to the current market price before can delist, right? That's why, in short, yes, they can delist the REIT provided they have enough votes. Okay. Okay, Tony asked about how many REITs should I have in your portfolio. It very much depends on how big is your portfolio size. Because if your portfolio size, maybe you only have $1,000 to invest in REIT, basically 1,000, you can't really diversify a lot because your commission will be very high. In Singapore itself, in order to buy the REIT, you need to have a minimum 100 shares. For example, if Ascenders REIT at the present moment is about 260. If you want to buy about 100 shares, it's $200 over already. And plus the commission that you have to pay for a broker, 25 plus, that does not really make sense. That's why it's very much depends on your portfolio size. If you have very small portfolio size, maybe less than 1,000 or maybe 5,000, I would suggest you can go for the REIT ETF. Right? If you have maybe 100,000 or 1 million, you can construct of maybe the portfolio between 10 to 15. All right, it's very much depends on your capital. But more importantly, you should not put all the egg into one basket. As a rule of thumb, maybe maximum per REIT, you should not allocate more than 15%, 1-5. Okay. Okay, Richard, maybe I'm still going through the questions.
No problem. Just take a time to look at the questions. And again, for those of you who are watching it on YouTube live, now is the time to join us in the webinar room if you have questions to ask. Okay, so they take this chance to throw your questions at Kenny and see what he has to say. After all, he has been watching the market keenly because he has a portfolio for himself as well as a portfolio for his clients that he's looking after. Have you found the next question to answer?
Yeah, okay. Jeep asked about, can use CPF OA to buy REITs? Yes, the answer is yes. You can use a CPF OA to buy REITs. And also, it makes sense to use CPF OA to buy REITs. The reason being is because CPF OA is only giving you the 2.5% interest, but REIT actually at the present moment is giving you much higher dividend yield. But just take note, there are two negative sides if you're using a CPF OA. If you do not have enough money in your CPF OA, when there's a right issue, you may not be able to subscribe the right. That's one negative point. The other thing is if you park your money in the CPF OA, basically you're receiving 2.5% risk-free. You do not need to worry about anything. You just get 2.5% every year and compounded over the years. But if you buy risk, just take note that there's a price volatility. Okay, you'll be up and down. You can lose money on the REIT itself. Okay, JQ asked about, is the sell down for the retail REIT today an opportunity, or we will be expecting more sell down in the next few weeks? All right. Okay, answer the first question first. Is the sell down for retail REIT today is an opportunity? Okay, personally, I feel that is an opportunity. The reason being is because of the news of SPH that cut the dividend by a lot. That's why the perception is all the retail REIT you'll be doing badly in the near term. People just looking at very short term, and when it have all those downgrade by the analyst or the researcher, they're definitely that most likely they will reduce all the target price. Okay, because their visibility when they do the analysis and also research and do all the intrinsic value, probably they are just using a 1 year time frame. Right? But if your holding horizon is 10 years, 20 years, you can ask yourself, 10 years, 20 years, what will happen to Causeway Point? What will happen to North Point? What will happen to a Plaza Singapura? What will happen to the Junction 8? What will happen to Westgate? Will it be very crowded, or the rental going to increase year over year, right? If you think that long-term wise, the retail mall of Singapore is here to stay, right? Then by all means, now is the best time for you to buy something at cheap. Okay, or we will be expecting more sell down in the coming next few weeks. Nobody can predict the future. It may go down due to the further downgrade of the REIT itself, right? What you can do is, you know that at the present moment the price is cheap. What you can do is you just maybe split into a few phases. You enter a little bit here, maybe 25% of portfolio. if coming 1 or 2 months or the next earning to have another round of sell down, you can enter another 25%, right? And so that you left 50% to wait for a future opportunity. More important thing is for planning purpose. Whatever happen in the market, whether it's going up or coming down, you must always have a bullet to do the next step. Okay, that's one of advice I will give to the investor.
The moment of silence. I believe Kenny is going through the questions, so let him just see so many questions inside. So let him
Okay.
pick the next question to answer. Yep.
Okay, where do I get the information of the yield of the FTSE REIT index rate of the 9.49%? All right, the 9.49% is not from a FTSE REIT index. The 9.49% is the average yield for the 41 REIT in my REIT table. I just do a simple average. The FTSE ST REIT index yield at the present moment, I think is 7 point something percent, because the weightage for the REIT index is different. REIT index is using a weighted market capitalization. Okay, next question. Should we steer clear of the hospitality REIT now? Okay, at the present moment, the valuation of a hospitality REIT is at a historical low. Okay, if you can remember, I show you the psychology, investing psychology, right? I would say that if you want to get rid of this hospitality REIT now, you are selling at low. Okay, you're not selling at high. Okay, my advice is you probably have to hold until it recover. REIT are okay from Baguhan. REITs are obligated to give 90% in dividend, but SPH REIT break the rule. How likely the other REITs you follow SPH REIT example? Okay, rules is rule. That's why you can see that actually yesterday or today, actually the government is coming out to set a new bill to really protect all this kind of business, right? I think that maybe they'll give some concession during this period to protect all the business. As long as the business is being protected, they are not going bust. I believe that eventually they'll come back. I think this new bill is good for the REIT itself. Okay, Alex asks, can the REIT manager call for extraordinary meeting to request for dividend waiver? So far, never seen this guy in the history, but I don't rule out the possibility. Okay, I don't rule out. Okay, in this environment, anything happen. Anything happen. That's why you can see the U.S. Federal Reserve also doing something that they haven't never done before. Okay, they just have a virus rescue package. They have a ultra low interest rate environment. They even go to the stock market to go and buy bond or even want to buy stocks. Right, anything can happen. Okay, some people ask, they are just join the webinar. Is this webinar being recorded? Okay, maybe Richard, I'll leave it to you to answer this one while I'm reading the rest of the question.
Yes, the webinar is being recorded. Will it be kept on YouTube or made available on the website? That one is a decision that we'll make later on. Okay, let's move on to the other questions.
Okay, you ask about the industry. You have mentioned the industrial REIT are the preferred segment. Any other REIT segment that we should focus? I did not really mention the industrial REIT are the preferred segment. I just show the data at the present moment. If you base on the business operation, the industrial REIT should be the least impacted. The reason being is it's not so easy to terminate all the tenancy agreement because the factory, they are still putting a lot of machine in the factory itself, and they'll do all what it needs to really cut costs. For example, retrench worker, to cut all the expenses, to downsize, to ask people go on unpaid leave before they really can break the so-called the lease, right? Definitely, hospitality and also the retail sector will be badly affected during this short period of time. But you just imagine, if this coronavirus can be quickly controlled within 2 or 3 months, right? All this beaten down sector, which means that retail and hospitality probably will be rebound very fast. But I think the retail in Singapore will be rebound much more faster. But hospitality around the world, because they are mainly focused on a service apartment and also the hotel, maybe may not be so fast, because I think that people still a bit worried to travel overseas for holiday. Okay, Colin asked about how to invest in REIT through you if I don't have time to monitor. Okay, basically, I can offer the REIT advisory, basically understanding the investor financial objective, the time horizon, and also risk profile, and what are the risk appetite. More important is the risk appetite. Okay, and what are the expected dividend yield, and I also explain the pros and cons, and basically I can help the investor to construct a whole portfolio and cut through all the learning curve and straight away buy on your behalf. Basically, you can outsource the whole investment decision to me. I can help you to carry out all the trade and also advise you what to do, what REIT to buy, what price to buy, how to allocate, how to split into different sector, and so on and so forth. Okay, CJ asked about, do you think the REIT sector has bottomed out, and is it good time to buy in now? Okay, I believe that I have in the webinar I mentioned a few times. Okay, I just want to mention it again. Based on the technical analysis, the 40% from peak to bottom and rebound from a 10-year support, and also corrected about 50% Fibonacci level. Technically, we are quite close to the bottom. And based on the price to NAV I have been tracking for the past 10 years, current valuation is really close to the very lower range of the valuation, right? It may go lower, but I think that the downside is limited. Okay, it may go lower, but I do not know when it's the bottom yet, but it's close. What an investor can do is just spread out all your investment into 3 or 4 phases, accumulate slowly, because if you spread out your investment through time diversification, at the end of the day, you will lower down your weighted average purchase price. When the market recover, you basically you can enjoy the increase in capital gain, and at the same time increase in dividend. Why was there a huge sell down of retail REIT today? Okay, this one from Feng Deqi, right? Just maybe you miss out my that portion. Okay, the reason why the retail REIT has a huge sell down today, because SPH REIT, which has Clementi Mall and also Paragon Mall, they have a huge cut in terms of dividend. Okay, that's why Fraser Central Point and also Capital Mall and even Maple Tree Commercial, they have a huge sell down, because everyone expect all this REIT you have a big cut in dividend. Okay, Sean asked about, would a further fall in REIT prices causes REIT gearing ratio to increase beyond 45? When that increase beyond 45%, what will happen if they can no longer meeting the MS requirement? Okay, when the REIT price drop, that will not cause the gearing to hit the 45%. If you look at the gearing, if you look at the gearing formula, is a price divided by, sorry, the gearing formula is debt divided by asset, right? The only worry is the asset, the NAV drop. The NAV drop. The asset value will be probably will drop because based on the valuation is the asset value is determined is a function of the future cash flow, which means the future rental income, right? When the asset value drop, you may hit the 45%. When you get close to 45%, in order to meet that regulation, there are few possibility. The one possibility is the REIT you have to issue right because they cannot borrow anymore. They have to issue right so that to lower the gearing. Okay. The second possibility, I think MAS and or maybe SGS, they'll come in to help the REIT during this period, maybe by giving some leeway when this thing happen. Okay. Okay. Stephen asked about, I do not know which REIT to buy now. But REIT ETF. Okay, for those who do not know what to buy now, you can go for REIT ETF. There are 3 REIT ETF in Singapore. Basically, these 3 REIT ETF had different location. One of the REIT mainly will be focused on Singapore. The other one will be mainly on Australia property and also Singapore property. The third one you'll be focusing on Singapore and also Hong Kong. Okay, you need to decide which one is more suitable or you're more comfortable with. Wang asked about can use SRS to buy REITs. Yes, you can buy use SRS to buy REIT, but you also need to take note the thing that will be similar to CPF OA. You need to make sure you have enough cash when there is a right issue and also corporate action. Okay, because right issue is very common thing happen in REITs. If you do not have enough cash in your SRS account when they have an issue or right issue, you definitely you lose in the so-called dilution because share price drop. Okay, Hadley asked, okay, I think I see a contradiction. If you follow the big boys and buy what they are heavily buying for REITs, wouldn't it contradictory that I should instead buy REIT that have been heavily sold down in their value? Okay, basically, I don't follow the big boys buy. I just watch what the big boys are doing so that I know what is going on in the market. I don't follow the analysts, what they buy. I don't follow what the big boys buy, right? Because at the end of the day, it's very important that when we construct a portfolio, we always focus on the objective. When the big boys buy and sell, we do not know what are their objective. I do not know whether they are going in for the short term or maybe 1 year or long term or portfolio rebalancing, or they need to sell some REIT to go and reallocate into other asset class. I don't know. I don't know what is happening behind the scene. That's why I would not suggest just blindly follow what the big boys are doing. Okay. More importantly, focus on ourselves because the time horizon is definitely different from the big boys. Okay, Merwin asked about how cheap for the Parkway Life has to go before we should buy into. Okay, if you base on price to book value, at the present moment, Parkway is still pretty expensive. Okay, normally what I do is I will look at a historical price to book. As long as it's close to the price to book historical lower range, I will go in. Bang asked about what are the few risky REITs, okay, similar to Eagle Hospitality that we should avoid. basically at this present moment, you do not know what are the risks are risky, right? Because it's very much depends on the business and also sector they are in, and also depends on whether the tenant will default, right? REIT is just the person holding the property, right? Is the tenant at the present moment, they may encounter a lot of cash flow issue, right? And whether the tenant is able to overcome all these cash flow issue is a question mark. That's why, in short, if you want to avoid, that means in your definition, in my definition, I would say that those REIT which has very limited property, maybe have 2 property, 3 property, and have very, very limited tenant, those are riskier one. Okay. For example, iREIT Global, they have one big tenant. I think the so-called income contribution close to 40 to 50%. Those are very high risk because one tenant default immediately 50% will be affected. So look at the tenant diversification and also look at number of property to determine whether they are risky or not risky. Okay, Leo asked about if I have around 10,000 investable amount in my CPF OA, what is the advice on the REIT portfolio I should build on? Okay, again, CPF OA question again. If you want to buy individual REIT, you have to pay attention to all the right issue, corporate action, right? If you do not want to deal with all this kind of thing, you can use that one to buy you just go for ETF. Okay, REIT ETF. Tony asked about where to get the SGX fund flow weekly tracker. You can go to the SGX website. Okay, go and search for it. There are a lot of information under the SGX website. Chris asked about if I am already nearing the retirement age in 5 years' time, how much percent do you recommend to invest in the REIT versus other equity? Is 100% too high? If you are moving into a retirement, definitely if you're allocating 100% into the equity is too high. The reason being is the risk profile, in general, the risk profile for retiree has to be more conservative in nature. Okay, you should allocate more asset allocation into fixed income instead of having a very high exposure in the equity space, right? You can talk to your financial planner or investment advisor to look at a risk profile. Okay, that's very important. Okay, definitely 100% allocation is not good for the retiree. Okay, we'll ask about I am new to REIT. Okay, for newbie who want to invest in the long term, you can start with the REIT ETF first, right? Then after that, you can start to learn about how to invest in individual REIT and start to learn from there. Because REIT ETF, you do not need to understand so many financial ratio jargon, the business side of it, and also you do not need to deal with all most of the corporate action. Okay, but on another hand, the trade-off is REIT ETF, the return will be lower. But REIT ETF, the benefit is you can have a quick diversification. Okay, Leo asked about other blue chip stocks like DBS, OCBC, UOB, Singtel are also having a very high dividend compared to REIT. If I'm going for dividend yield, should focus on the equity of REIT. There is no right or wrong answer. It depends on your risk appetite. I want to highlight the main difference. If you're looking for dividend for those other companies, for example, SIA, DBS, Capital Land, right? Comfort they'll grow. The dividend payout is very much depends on the operating cash flow, which means that how well their business is running, how well their business is able to generate the positive cash flow from their operation, right? And based on the cash flow generated from operation, the management can make a decision how much percentage they can pay out the dividend. That's why the dividend payout ratio. Some of them you pay out 50% dividend, some of them you pay out 60% dividend. That's why the management have a discretion to decide how much dividend they want to pay out. They can decide not to pay dividend. Okay, unlike REITs. REITs by law, in order to have a tax concession, they have to pay out minimum 90% of taxable income, right? That's why if you want to have some predictability and also more or less some sort of guarantee take out a dividend, REIT is the better option. Okay, HC asked about, I have REITs, too late to sell. Shall I sell when rebound and buy later or just hold? Okay, typical question to most of people. There's no right or wrong whether you want to buy or hold or sell. The key thing you have to ask yourself, what is your objective? Why are you investing in REIT? Are you investing for dividend or investing for capital gain? Are we investing for long term or are you trading? Okay, you have to be very clear what you are trying to do first before you make that kind of decision. Every time you sell, every time you have to ask about your own question. After you sell this investment, what are you going to do with all this money? Are you going to reinvest or are you going to park in the cash? Right? And when are you going to go in again? Right? And then are you buying the right thing? Are you buying the right asset class? Okay, there are many questions. JT asked about hospitality REIT. After COVID, are they still stronger than Ascendas or Mapletree? Hospitality REIT after COVID are still stay. Okay, hospitality REIT in general is very volatile in nature, and also is very seasonal because it's very much depend on the tourism and also the people stay in a hotel, and they do not have very long list. Okay, basically hotel stay is very short term. That's why it's very depends on the on the so-called the holiday season and also traffic. It's very volatile, right? If you want to have a hospitality REIT in your portfolio for long term, it's not advisable. You should treat as a tactical, can play so-called capital gain play, but you should not include it into your as your core portfolio. Okay, there are different nature for the hospitality REIT. Okay, DY asked about, is there a possibility REIT issuing rights but not use the fund for positive reason, such as buying new property, or negative reasons such as to sustain dividend? Yes, there is a possibility REIT issuing right for many reasons. Okay, some reason that can maybe pay down the loan, pay down a debt, right? Or they can issue rights to for the working capital. Sometimes they also issue right for to sustain a dividend. Okay, but normally they will not do this kind of thing because everything they want to do this kind of thing, probably they will have a lot of complaint from the shareholder, and nobody want to subscribe for the new rights. Okay, sorry for those who ask specific REIT question. Whether this REIT is good, that REIT is good. I will not comment on the individual REIT. Because I can give advice into individual request, but not in the public. Okay, Will ask about, I am planning to invest $500 per month in REITs. What is the best method to invest in REIT? Okay, if you only have $500 per month, if you're investing in individual REIT, it does not really make sense because the amount is too small, and end up your cost of commission compared to your total investment amount, the percentage should be very high. What you can do is you can maybe look at some of the banks, they have a share builder, money share builder plans. You can look into this one, that one, or you can invest in REIT using the unit trust. okay, you can go to the Poyens platform or Fund Supermarket, choose some of the unit trusts to invest in REIT. Okay, Colin asked about the advisory service. Do you provide the future monitoring service, including executing the trade in future after constructing a portfolio? The answer is yes. K asked about, will share price affect NAV? No, share price will not affect the NAV. NAV will be affected mainly by the valuation of a property, and the valuation of property will be affected by the rental income. How to buy? Elvis asked about how to buy REIT ETF by using dollar cost averaging. You can use the dollar cost averaging during this volatile period. Sean asked about, could things get so bad in theory that REIT receive a margin call from a bank then is at risk at a foreclosure? Could the REIT try to save myself by issuing more REIT? Yes, they can. There are a few ways the REIT can do. One is issuing more rights. The second thing they can do is by looking for the private investor for private placement. Okay, in general, basically they want to get more cash. The third scenario is they can sell some of the property to raise cash and also pay for all the margin or pay for the debt. The fourth scenario is they can look for another REIT, ask them to go and buy over and do the merger and acquisition. That's why there are a lot of things to do as long as they have a tangible real estate. Okay, HC asked about the REIT portfolio, which sector should be core? The core portfolio should be the one that growth in long term is very stable in nature. Okay, industrial, you can consider industrial as a core, suburban mall as a core, and also the healthcare as a core. Office and also hospitality is very much depend. They are quite volatile, depends on the economic cycle. Okay, that's why in short, if you want to have a core portfolio, you look for those defensive sector. Okay, someone asked me what is the cost for me to manage a portfolio, what is the minimum amount. You can drop me the email. These are the personal so-called individual question. You can send to my email, ask about it. Okay, HC asked about NAV is determined by whom, REIT manager or external party. Every year there will be the revaluation of all the net asset value and also property. Okay, this one is done by the external party. It's not a REIT manager. You can see all this kind of valuation report in the annual report. They have to so-called make it transparent. Okay, 1874 asks, high DPO can be misleading if the real reason is the price is dropping a lot. Yeah, that's right. That's why because the DPO payout is a lagging data, right? It may be the trailing 12-month TTM, stand for trailing 12-month, the past 4-quarter dividend. You divide by the current stock price. If a current stock price drop a lot, you spike up. Okay, of course, there are reasons why the current stock price has dropped a lot. It may be due to sentiment or due to fundamental or due to a market crash or due to margin call. There are many reasons. That's why it's very important to really understand what are the reasons why the share price drop a lot.
Okay, I think we have reached, or rather, we have crossed the time that we're supposed to end the webinar, and we have also reached the end of the questions. There are some questions that are repeated, and some questions that are not too appropriate to answer in the public because they need to be under, cannot be done in the public, because Kenny is licensed, so we won't be able to. He won't be able to answer those questions. Okay, back to the question about how to reach Kenny. Now, as you know, Kenny runs a blog. Has been writing on the blog since 2009, and it is called mystocksinvesting.com, my stocks with a S, investing.com. So if you want to reach him, you have more questions, or you want to consult a licensed advisor on what to do, then please go to his blog, how to reach him, and the information is available there. And in fact, if you go to his blog right now, the radio interview that he did with FM is right there. Okay, FM 89.3 is right there, and then you can click it to listen to the interview that he have done with FM 89.3. And then if you want to look for his email, I think you can also see on the screen. It is kennylow@fapl.sg. So it's really quite easy to reach him. So just go to his blog, and then you can find out about his insights there. Join his Telegram group. If you haven't joined it, it is here. Okay, so I think we have reached the end of the time that we have. So we will record, this webinar is recorded. If you have registered with your accurate email address, then we will email you the webinar replay sometime next week. And if you have not registered and you're watching this on YouTube, please go to register for this webinar. And then we will send by this weekend, and then we will send the webinar replay to you then as well. And then all the links to the various items that I mentioned will also be put into that email. Like, for example, if you want to give some tips to his son for compiling the Excel file, how to pay, all those will put it into the email if you are registered for the webinar. So with that, I'd like to thank Kenny for a very, very excellent webinar that you have answered, I think close to 30 or 40 questions, right, in about 45 minutes. Thank you, Kenny.
Okay, thank
I
you,
think he
Richard.
knew his, thank you. Yeah. So, and thank you, the audience, for listening in for the last 2 hours and 10 minutes. So please join Kenny's Telegram channel, search for Retirement in Telegram, and you will be able to continue to receive his insights. Okay, and have a very good night and be safe. And goodbye, everyone. And bye, Kenny.
Bye.